Look, for the past 2013-14 financial year, the fund's MySuper, or old balanced option as it used to be known, has declared 12.15% after all fees and taxes. This is coupled with the previous financial year's return of 13%. The two combined have given the fund a 25% or 25+% return over the past 2 years. We're pleased about this, particularly because of the size of the returns over the last 2 years. But more importantly, the fund's cost structure means that a lot of that return has actually ended up in the members' pockets. The low cost structure of Club Plus means that all the returns that the members earn go straight into their accounts, which for us is a primary focus, and we're very pleased about that. Look, long term, the fund over the last 10 years, its performance has been very good. The fund consistently ranks in the top quarter to a top third of all funds across the country. We're pleased that our returns over that period have been in the 8 to 9% bracket. Again, those returns coupled with our low fees mean that the actual benefit to the member is magnified because people aren't having money taken out in fees. Look, the other investment options have also performed well, as you could expect. Look, we have a very large range of returns over the options. The cash option has declared 2.78, while the Australian shares option has declared somewhere in the vicinity of 18%. Both of these, again, are all net of fees and taxes, and again, good returns in relation to the asset classes they represent. On the pension side, we're seeing returns for cash in excess of 3%, and in excess of 20% for the pension option, the net of fees and taxes. The investment approach for the fund it's still consistent. We haven't changed too much. One of the things we pride ourselves on is making sure our managers adhere to what we want them to do. In the past 12 months, we have terminated 3 managers for underperformance. This basically means that we keep all our managers on notice that as long as they're performing and doing what we want them to do, they'll continue to have mandates with us. If they don't perform, we're not going to carry them. So we have a continual process of making sure our managers do what we ask them to do, and by doing that, we ensure our members continue to get the performance that we want for them, and we keep our fund at best practice. We have also looked at other managers during the year to improve our overall fund management, and by that we've replaced a couple of managers with better managers, and in doing so have overall increased the quality of managers inside our fund. Again, we're very focused on 2 things: making sure we don't take risk with members' money unnecessarily, and also keeping a very close eye on cost. We don't wish to be the highest performing fund in the country. We want to be known as the fund that gets best value return on its money and keeps a consistent, risk-focused return profile. Look, I think there's a couple of big issues that we're about to deal with in the coming 12 months. There's quite a lot of movement around in the investment markets. You're seeing a lot of issues overseas, especially on the geopolitical front, the Middle East and the Ukraine. They're upsetting some of the investment markets. We expect that from time to time, but as a fund we're adequately diversified to compensate for these sort of issues. We're not overly invested in any one particular asset class that may or may not be affected. One of our core strengths and key priorities to make sure the fund diversifies wherever and whenever it can, meaning that if one investment market gets issues with it, we as a fund don't get overly affected. As I said, some of the geopolitical concerns running through the world at the moment are upsetting investment markets, especially the equity markets, but we have adequate diversification to ensure that that doesn't overly affect our return profile. Perhaps some of the other issues that people might be interested in are the GDP rates and the cash rates in Australia. They're starting to get a lot more media play. We're still running at historically low cash rates. 2.5% is the effective cash rate, which means that people who invest in cash and term deposits are seeing very low real rates of return on that, and that affects especially people in the retirement space. That affects people's yield. Again, we're watching that closely. It doesn't look like there's going to be much action on that, but that simple fact of having very little action may cause people to reconsider their investment decisions. Again, around Australia, the investment markets have had a really good run the last 2 years. The Australian stock market's done 20% year on year for 2 years, which is great for our members because that ends up in their members' accounts. But again, we also are cognizant of the fact that things don't go up forever. So we've got to be adequately aware that things mightn't continue to play out that way. Look, from 1 July this year, the fund Club Plus has introduced an international shares option, and that's for people who wish to get some more diversification outside of Australia. If you're a shares investor and you're interested in what happens in the broader world, we now have an option for you to use. This can also be used in conjunction with our Australian shares option, and it can also be used in conjunction with our DIO platform, which allows members to invest directly into shares, TDs and other themselves. The international shares option, as I said, started 1 July, and we're starting to see members move into that now. Going forward, as a fund, we look at new options from time to time, and we'll continue to do that, so don't be surprised if there's not something new in 2015.